The Most Important Thing, Uncommon Sense for the Thoughtful Investor, is a book written by Howard Marks, a renowned investor and co-founder of Oaktree Capital Management. Here are the 15 main points from the book. 1. Risk is the most important consideration for investors, and it must be managed carefully. The goal of investing is not to avoid risk, but to manage it effectively. 2. Successful investing requires a balance of rationality and creativity. Rationality helps investors avoid mistakes, while creativity helps them find opportunities. 3. Market cycles are a fact of life, and investors must learn to adapt to changing conditions. The market is not always efficient or rational, and it can be irrational for long periods of time. 4. The key to successful investing is to be contrarian. This means going against the herd and buying assets when they are undervalued and selling them when they are overvalued. 5. Investing is not a science, but an art. There are no surefire formulas or guarantees for success, and investors must be comfortable with uncertainty and ambiguity. 6. Investors should focus on the long term and avoid short-term thinking. Short-term fluctuations in the market can be noisy and distracting, and they often have little bearing on the long-term prospects of an investment. 7. Investors must be disciplined and patient. The best investment opportunities often require waiting and watching, and investors must have the fortitude to stick to their strategies in the face of uncertainty and adversity. 8. Investors must have a deep understanding of the businesses and industries they invest in. This requires a willingness to do research and analysis, and to seek out information from a variety of sources. 9. Diversification is important, but it is not a panacea. Diversification can help reduce risk, but it can also limit potential returns. Investors must strike a balance between diversification and concentration. 10. The most important thing for investors is to always be learning and improving. The investment landscape is constantly evolving, and investors must be adaptable and willing to learn from their mistakes and successes. 11. It is essential to understand the difference between price and value. Price is what you pay, while value is what you get. Investors must focus on the value of an asset, not just its price. 12. Margin of safety is crucial for successful investing. This means buying assets with a large margin between their price and their intrinsic value, in order to protect against downside risk. 13. Investing requires a margin of superiority. Investors must have an edge, or an advantage in order to beat the market. This can come from knowledge, experience, or other factors. 14. Investors must be aware of their own biases and limitations. Cognitive biases, such as confirmation bias and overconfidence, can lead to poor investment decisions. 15. Investors must have a clear understanding of their own risk tolerance and investment objectives. This requires honesty, self-awareness, and a willingness to take responsibility for one's own decisions. Point 1 of The Most Important Thing, Uncommon Sense for the Thoughtful Investor, emphasizes that risk is the most important consideration for investors. Investors should not aim to avoid risk altogether, as that would mean sacrificing potential returns. Instead, they must aim to manage risk effectively. Managing risk involves understanding the risks involved in investing and making informed decisions based on those risks. Investors must be aware of the risks associated with each investment and decide if the potential rewards justify taking those risks. This means conducting thorough research and analysis before making investment decisions, diversifying their portfolio, and maintaining discipline and patience even in the face of uncertainty and volatility. Investors should also consider their risk tolerance, which is their ability and willingness to take on risk. Risk tolerance varies from person to person and depends on factors such as age, income, and financial goals. It is important to understand one's own risk tolerance and invest accordingly, as taking on too much or too little risk can negatively impact investment performance. Overall, understanding and managing risk is a crucial part of successful investing. It requires knowledge, discipline, and the ability to make informed decisions based on a thorough understanding of the risks involved. Point 2 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor highlights the importance of balancing rationality and creativity in successful investing. Rationality involves using logic and reason to make investment decisions. Rational investors make decisions based on careful analysis of data and information, and they strive to avoid making decisions based on emotion or gut feelings. Rationality is important in investing because it helps investors avoid making costly mistakes. Creativity, on the other hand, involves looking at investment opportunities in a unique way and thinking outside the box. Creative investors are able to identify opportunities that others may overlook, and they are able to see the potential for value where others may not. Creativity is important in investing because it allows investors to find opportunities that may not be apparent to others. In order to be a successful investor, it is important to balance rationality and creativity. Rationality helps investors avoid making mistakes, while creativity helps them find opportunities. A rational investor who lacks creativity may miss out on potential investment opportunities, while a creative investor who lacks rationality may take on too much risk or make poor investment decisions. Ultimately, successful investing requires a combination of rationality and creativity. Investors must be able to analyze information and data objectively while also thinking creatively and looking for opportunities that others may miss. By striking the right balance between these two qualities, investors can improve their chances of achieving their investment goals. Point 3 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of understanding market cycles in successful investing. Market cycles are a fact of life, and investors must learn to adapt to changing conditions. Markets go through periods of expansion and contraction, and different asset classes may perform better or worse during different parts of the cycle. For example, stocks may perform well during periods of economic growth, while bonds may perform well during periods of economic contraction. It is important for investors to understand that the market is not always efficient or rational, and it can be irrational for long periods of time. During periods of irrationality, investors may need to adjust their strategies to account for market conditions. For example, during a market bubble, investors may need to be more cautious and focus on preserving capital rather than seeking out high returns. In order to succeed in investing, it is important to have a long-term perspective and to be able to navigate market cycles. This requires patience, discipline, and a willingness to adapt to changing market conditions. By understanding the dynamics of market cycles, investors can make more informed decisions about when to buy, sell, or hold different assets. Point 4 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor stresses the importance of avoiding the impact of psychological biases in investing. Psychological biases are inherent tendencies of the human mind that can lead to irrational decision-making. Common biases that can affect investors include overconfidence, loss aversion, herding behavior, and confirmation bias, among others. These biases can lead investors to make poor decisions, such as buying or selling assets based on emotion rather than sound reasoning. It is important for investors to recognize these biases and take steps to avoid their impact. One way to do this is to develop a disciplined approach to investing that is based on a sound investment philosophy. By following a consistent investment approach, investors can avoid making impulsive decisions based on emotions or short-term market fluctuations. Another way to avoid psychological biases is to focus on the long-term horizon and to maintain a well-diversified portfolio. Diversification can help reduce the impact of short-term market fluctuations and reduce the risk of individual investments. Ultimately, avoiding the impact of psychological biases requires self-awareness and discipline. Investors who are aware of their biases and take steps to avoid them can improve their chances of making sound investment decisions and achieving their long-term financial goals. Point 5 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of maintaining a margin of safety in investing. A margin of safety refers to the difference between the intrinsic value of an asset and its market price. The intrinsic value is the estimated value of an asset based on its underlying fundamentals, such as earnings, cash flow, or assets. The market price, on the other hand, is the current price at which the asset is being traded in the market. Maintaining a margin of safety is important in investing because it helps protect investors against the downside risk of their investments. By buying an asset at a price that is significantly lower than its intrinsic value, investors can reduce the risk of losing money if the asset's price falls. One way to maintain a margin of safety is to focus on buying assets that are undervalued by the market. This can involve analyzing a company's financial statements, industry trends, and competitive landscape to determine its intrinsic value. If the intrinsic value is significantly higher than the market price, then there may be a margin of safety. Another way to maintain a margin of safety is to diversify one's portfolio. By investing in a variety of assets across different sectors and geographies, investors can reduce the risk of any one investment negatively impacting their portfolio. In summary, maintaining a margin of safety is an important principle in investing that can help protect investors against downside risk. It requires careful analysis of an asset's intrinsic value and market price, as well as a disciplined approach to investing and a well-diversified portfolio. Point 6 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of being aware of the potential for cycles and trends in the investment world. Investing is not only about analyzing individual companies or assets, but also about understanding broader trends and cycles that affect different industries and markets. By being aware of these trends and cycles, investors can identify potential opportunities and risks in the investment landscape. For example, technological innovation has been a major trend in recent years, driving growth in sectors such as e-commerce, cloud computing, and artificial intelligence. Investors who were aware of this trend and invested in companies that were poised to benefit from it may have enjoyed strong returns. Similarly, different asset classes, such as stocks, bonds, and real estate, can go through cycles of boom and bust. By being aware of these cycles, investors can adjust their investment strategies accordingly. For example, during a period of economic expansion, investors may want to allocate more of their portfolio to stocks, while during a period of economic contraction, they may want to allocate more to bonds. Overall, being aware of cycles and trends is an important part of successful investing. It requires careful analysis of macroeconomic factors, industry trends, and market conditions. By staying informed and adjusting one's investment strategy accordingly, investors can improve their chances of achieving their long-term financial goals. Point 7 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of having a long-term investment horizon. Investing is a long-term process, and successful investors are those who are able to focus on the long-term picture rather than short-term market fluctuations. By taking a long-term perspective, investors can avoid making impulsive decisions based on emotion or short-term market movements, and can instead focus on their long-term financial goals. One key advantage of a long-term investment horizon is the power of compounding. Compounding refers to the ability of an investment to generate earnings, which are reinvested and then generate more earnings, leading to exponential growth over time. The longer the investment horizon, the greater the potential for compounding to work its magic. Another advantage of a long-term investment horizon is the ability to ride out market volatility. In the short term, markets can be highly volatile, with prices fluctuating rapidly in response to economic news or other events. However, over the long term, markets tend to be more stable, and the impact of short-term volatility tends to be smoothed out. To maintain a long-term investment horizon, it is important to avoid making impulsive decisions based on short-term market movements. Instead, investors should focus on the underlying fundamentals of the assets they own and their long-term potential for growth. Overall, a long-term investment horizon is an important principle in investing that can help investors achieve their financial goals over time. By focusing on the long-term picture and avoiding impulsive decisions based on short-term market fluctuations, investors can improve their chances of success. Point 8 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of being contrarian in investing. Being contrarian means going against the prevailing market sentiment and investing in assets that are out of favor with the market. This can involve investing in companies that are temporarily out of favor due to short-term challenges, or investing in industries that are currently out of favor with investors. The rationale behind being contrarian is that the market can sometimes be irrational and driven by emotion, causing prices to be misaligned with the underlying fundamentals of an asset. By investing in assets that are currently out of favor, investors can potentially buy them at a discount to their intrinsic value and profit when the market eventually recognizes their true worth. However, being contrarian requires discipline and patience. It can be difficult to go against the prevailing market sentiment and hold onto an investment that is not performing well in the short term. But if the underlying fundamentals of the investment are sound, being contrarian can pay off over the long term. One key to being contrarian is to focus on the underlying fundamentals of an asset rather than short-term market movements. This requires careful analysis of the asset's financial statements, competitive landscape, and industry trends. By understanding the underlying fundamentals of an asset, investors can identify potential opportunities that the market may be overlooking. Overall, being contrarian is an important principle in investing that can potentially lead to superior returns over the long term. It requires discipline, patience, and a focus on the underlying fundamentals of an asset. By being contrarian and investing in assets that are currently out of favor, investors can potentially buy them at a discount to their intrinsic value and profit when the market eventually recognizes their true worth. Point 9 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of having a margin of safety in investing. A margin of safety refers to the difference between an asset's intrinsic value and its market price. In other words, it is the amount by which an investor can buy an asset below its true worth. Having a margin of safety is important because it provides a cushion against potential losses if the asset's value declines. The concept of a margin of safety was popularized by Benjamin Graham, the father of value investing. Graham believed that a margin of safety was essential to successful investing, and that investors should always seek to buy assets at a significant discount to their intrinsic value. One key advantage of having a margin of safety is that it provides a buffer against unexpected events that can affect an asset's value. For example, if a company experiences a temporary setback or a broader economic recession occurs, having a margin of safety can help protect investors against losses. To calculate a margin of safety, investors need to estimate an asset's intrinsic value based on factors such as its financial statements, competitive landscape, and industry trends. They can then compare this estimate to the asset's market price to determine whether it is trading at a discount or a premium to its intrinsic value. Overall, having a margin of safety is an important principle in investing that can help protect investors against potential losses and provide a cushion against unexpected events. It requires careful analysis of an asset's underlying fundamentals and a willingness to be patient and disciplined in buying at a discount to its intrinsic value. By focusing on a margin of safety, investors can improve their chances of achieving their long-term financial goals. Point 10 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of being mindful of cycles in investing. Cycles refer to the ups and downs of economic activity, which can have a significant impact on the performance of different assets. For example, during an economic expansion, stocks and other riskier assets tend to perform well, while during a recession, bonds and other safer assets may perform better. Being mindful of cycles is important because it can help investors make better investment decisions. By understanding where the economy is in the cycle, investors can better position their portfolios to take advantage of opportunities and avoid potential risks. However, it's important to note that cycles can be difficult to predict, and investors should be careful not to base their investment decisions solely on their expectations of where the economy is headed. Instead, they should focus on the underlying fundamentals of the assets they are considering and seek to invest in assets that are trading at a discount to their intrinsic value, regardless of where the economy is in the cycle. One key to being mindful of cycles is to diversify across different assets that are likely to perform well in different economic environments. For example, investors may consider holding a mix of stocks, bonds, and other assets that are likely to perform well in different economic environments. Overall, being mindful of cycles is an important principle in investing that can help investors make better investment decisions. It requires careful analysis of economic data and a willingness to be patient and disciplined in building a well-diversified portfolio that can weather different economic environments. By being mindful of cycles and investing in assets that are trading at a discount to their intrinsic value, investors can improve their chances of achieving their long-term financial goals. Point 11 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of having a long-term perspective in investing. Having a long-term perspective means focusing on the underlying fundamentals of the assets you are investing in and being willing to hold onto them for an extended period of time, regardless of short-term fluctuations in their prices. This is important because short-term fluctuations can be driven by a wide range of factors, including market sentiment, news events, and other short-term factors that may not reflect the underlying value of the asset. By focusing on the long-term fundamentals of an asset, investors can better evaluate its true worth and avoid getting caught up in short-term noise. One key to having a long-term perspective is to focus on the underlying quality of the assets you are investing in. This means investing in companies with strong financials, competitive advantages, and a proven track record of success. By investing in high-quality companies, investors can be more confident that the assets they are holding will continue to perform well over the long term. Another key to having a long-term perspective is to avoid getting caught up in short-term market movements and noise. This requires discipline and a willingness to tune out the day-to-day fluctuations of the market and focus on the long-term goals of your investment strategy. Overall, having a long-term perspective is an important principle in investing that can help investors avoid getting caught up in short-term noise and make better investment decisions. By focusing on the underlying quality of the assets they are investing in and avoiding short-term market movements, investors can improve their chances of achieving their long-term financial goals. Point 12 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of being contrarian in investing. Being contrarian means going against the prevailing market sentiment and investing in assets that are currently out of favor or undervalued by the market. This can be challenging, as it requires going against the herd mentality that often dominates the market and can lead to irrational pricing. However, being contrarian can also be a powerful strategy for investors, as it allows them to take advantage of mispricings in the market and buy assets at a discount to their intrinsic value. To be contrarian, investors need to have a deep understanding of the assets they are investing in and be willing to do their own research and analysis. They also need to have the courage to go against the prevailing market sentiment and be willing to hold onto their investments for an extended period of time, even if they initially appear to be out of favor. One key to being contrarian is to focus on assets that are trading at a discount to their intrinsic value. This requires a rigorous analysis of the underlying fundamentals of the asset and a willingness to be patient and disciplined in waiting for the market to recognize its true worth. Overall, being contrarian is an important principle in investing that can help investors take advantage of mispricings in the market and achieve higher returns over the long term. It requires discipline, patience, and a willingness to go against the herd mentality that often dominates the market. By being contrarian and investing in undervalued assets, investors can improve their chances of achieving their long-term financial goals. Point 13 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of avoiding market folly and maintaining a margin of safety in investing. Market folly refers to the tendency of the market to become overly optimistic or pessimistic about certain assets or sectors, leading to irrational pricing and potential losses for investors. To avoid market folly, investors need to maintain a margin of safety in their investments. This means investing in assets that have a sufficient cushion of safety in their price, such that even if the market were to turn against them, the investor would still be able to protect their capital. One way to maintain a margin of safety is to focus on assets that are undervalued by the market. This requires a rigorous analysis of the underlying fundamentals of the asset, such as its financials, competitive position, and growth prospects, to determine its true intrinsic value. Another way to maintain a margin of safety is to avoid investing in assets that are overvalued by the market. This requires discipline and a willingness to avoid the herd mentality that often dominates the market and can lead to irrational pricing. Overall, maintaining a margin of safety is an important principle in investing that can help investors avoid potential losses and achieve higher returns over the long term. By investing in assets with a sufficient cushion of safety in their price, investors can protect their capital and take advantage of mispricings in the market. Point 14 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of being patient and disciplined in investing. Investing requires a long-term perspective and the willingness to hold onto investments through market ups and downs. This requires patience and discipline, as it can be difficult to resist the urge to sell during times of market volatility or to chase after the latest hot investment. To be patient and disciplined, investors need to have a clear investment philosophy and stick to it, even when the market appears to be moving against them. This requires a deep understanding of the assets they are investing in and a willingness to do their own research and analysis. Investors also need to have the discipline to avoid making emotional decisions based on short-term market movements. This means avoiding the temptation to sell during market downturns or to buy during market upswings, and instead sticking to their long-term investment plan. Finally, investors need to be patient and recognize that investing is a long-term game. It takes time to build wealth through investing, and there will be periods of market volatility and uncertainty along the way. By staying patient and disciplined, investors can stay focused on their long-term goals and avoid making short-term decisions that can derail their investment strategy. Overall, being patient and disciplined is an important principle in investing that can help investors achieve their long-term financial goals. By having a clear investment philosophy, avoiding emotional decision-making, and staying focused on the long term, investors can improve their chances of success in the market. Point 15 of The Most Important Thing. Uncommon Sense for the Thoughtful Investor emphasizes the importance of learning from past mistakes and experiences in investing. Investing is a learning process, and no investor is immune from making mistakes. However, the key to successful investing is to learn from those mistakes and experiences, and use them to improve future investment decisions. To learn from past mistakes, investors need to be honest with themselves about their investment decisions and the factors that led to them. This means reflecting on past investments and analyzing why they succeeded or failed, as well as seeking feedback from others, such as mentors or investment professionals. Investors also need to be open to new ideas and perspectives, and be willing to adapt their investment strategies based on what they have learned. This may require challenging their own assumptions and beliefs about the market and investing, and being open to new ways of thinking and approaching investments. Finally, investors need to be patient and persistent in their efforts to learn from their experiences. This means recognizing that learning takes time, and that there will be setbacks and mistakes along the way. However, By staying focused on the long term and continually seeking to improve their investment knowledge and skills, investors can improve their chances of success in the market. Overall, learning from past mistakes and experiences is an important principle in investing that can help investors improve their investment decisions over time. By reflecting on past investments, seeking feedback from others, and being open to new ideas and perspectives, investors can become more knowledgeable and skilled in the market and increase their chances of achieving their investment goals. Thank you for your interest in this book. I would much appreciate it if you leave your feedback on this book in the comments below, or just put a like on this video. You can find links in the description of this video, where you can purchase and download this book.